Hello traders everywhere, Adam Hewison here in the digital studios of MarketClub with your midday market report for Friday the 24th of May. Well, it's a long weekend for sure. It's the Memorial Day weekend here in the United States, and traders are going to be with their families hopefully and enjoying the summer, beginning of the summer, and we'll get started on Tuesday again when the market opens. But if the economy is so good, why did this happen? This is what I'm looking at. We're looking at three bedrock companies: Wal-Mart, Target, and Sears. We're going to look at all those markets today. They missed their earnings, and that to me is more important than what the Fed is doing right now, because it's signaling that the economy is really not that healthy. We're also going to be looking at gold to see if that's made a turnaround, and also some other markets as well. Are the currencies the new hot stocks? So let's just take a look at the markets. But before we do anything else, let's take a look at something we just put up that you should take a look at if you have time. It's a 3-minute video, and I think it's well worth your time. It's right here, and it's sell in May and go away right here. And I think it shows you a unique tool you can use that we've used on the indexes that I think really explains a lot of what's going on right now. So take the opportunity to look at the video. I think you'll enjoy it. So let's get back to our markets and go right to our portfolio. And here we are. It's Friday the 24th. And let's start with the Dow. We're looking at weekly charts. One of the things I like to do at the end of the week is look at weekly charts and see where we're finishing out the week. Now, it's still early in about 1 o'clock right now. And I wouldn't be surprised to see this market sell off at the end of the day. It's a long weekend because the traders really want to take a long weekend, or they just want to take their profits and come back after Memorial Day and look at these stocks again. The markets, of course, we've talked about the markets being overbought, overextended, all of the above. It's a Fed-induced punch bowl rally. It's not real. That's why we mentioned the Sears, the Wal-Marts, and the Targets. They're all markets that aren't meeting they're missing their targets in terms of sales and profits. And I think that's the important thing to look at, what's happening in Middle America. So let's go on to our next market, the NASDAQ, and that's going to close down the week lower. Would not be surprised to see further selling coming to this market later on in the day. Same with the S&P 500. Remember, watch the video if you haven't seen it already. I would say I'd be particularly negative on this market if it went through the 1626 level, which is quite a ways from here. I don't think it's going to happen, but you never know on Friday in a thin market. So moving along to the gold market. Gold is beginning to try to make a base, hasn't done so, but if you look on a weekly basis, this market continues to be in a downward trend. You can see the longer term monthly and weekly. What we're looking at, we have a Donchian trading channel and also a parabolic, and you see the little dots here above the market are indicating that that's where, when the market there, you can see these little dots I'm referring to right here, and the market is still in a downward trend based on the parabolic. So let's see how that plays out next week, but it looks as though to me we may be building a base right around the 1350 area, but we'll see and get a better idea of how that's going to play out next week. So let's just clear the screen again and go into our next mode, and that's going to be crude oil. Crude oil is closing down the week quite a bit lower. We closed at 96. Remember, we're doing the July contract. We're currently trading at 93.63. We're down about $2.50 for the week, and that's quite a lot. But it's still in a sort of sideways pattern, and we may continue to do that for a while. But prices for oil are higher than they started at the beginning of the year. You can see we're around about 90, so we're still higher now than where we are. And I think this is one of the things that's hurting the consumer. We haven't talked about this, but I think this is one of the things that's making it more expensive to go shopping, more expensive to get anywhere, go to work, you name it. It's just be more expensive to put gas in your car. So let's move along to our next market. This is the Eurodollar. The Eurodollar is closing out the week a little bit higher, but nonetheless the trend is pretty much sideways to lower here. You can see the triangles rolls indicating that the trend is pretty much in favor of this currency going lower. And currencies have really become the new stock market because there are really lots of opportunities. A $4 trillion market, and it really does count for a lot of trading. So here's Walmart stores. We talked about Walmart, and for the week we're going to close lower. In fact, this is going to be the lowest close in Walmart in 1, 2, 3, 4, 5, 6 weeks. Not necessarily a good sign, and you can see we're below the parabolic. You can see we talked about the parabolic before. We're just below this level. There's the parabolic dot coming through, and we've just closed below that. Not a good sign for this market. I expect to see more of a downward pressure coming in now. Just on our Fibonacci alone, we could probably see this market come back Okay, so we've drawn in the Fibonacci, and you can see we could potentially come back down to the middle of the Donchian trade channels. This is on a weekly chart, remember. So we could come down to be in the middle of the channel, which takes you to this level here, which is about 73, another $4, and possibly all the way down to 72, which would be quite a bit of a drop. But I'm not enthusiastic about buying Wal-Mart at this point in time. Our trade triangle is saying the longer term is still positive, but the near term, intermediate term, saying be out of this market from 77.37. So again, let's just be on the sidelines in this stock. So let's just clear that screen off and go to our next market. Next market, we're looking at Sears. Sears missed badly, missed very badly. And you can see here our trade triangles kicked in at 49.81, indicating the trend had turned down, intermediate term trend had turned down, and be out of this market for the time being. I also don't like this formation. This is a negative engulfing line, a bearish engulfing line, some would call it. If we close lower next week, it's going to mean this is definitely a top for Sears. And if you look at Sears, it hasn't gone anywhere that's too exciting. So let's move on to Target. Target's going to close out the week lower. You can see we made a new high, but we're closing lower for the week. Not a good sign. And this is the lowest close in Sweden. This is the lowest the market has traded for about 4 or 5 weeks. So I'm a little bit concerned about that. Again, missing, and the fast stochastic is negative on this market. So I think there's a lot of things to say that could say this is going to go lower. Let's take a look at the currencies. The Australian dollar, we've been very bullish on the US dollar against the Aussie dollar. You can see we've had a nice move up, and you can see we kicked in right around these levels here, around 96.53, and we're currently 103, so very nice profits in this position. All systems go on that. And also on the dollar yen, the yen actually put in a very big performance today, pulling back. We may have seen a temporary top. We were looking for this market to go to the 105 level. We got to probably the 103.50 level, and it sort of come back. So I would give this market some time. I don't think it's a rush to buy it, but I'd just give it some time. You could see a pullback possibly to the 98 level, and I think at that point in time, maybe 99, I'd start looking to buy it. So let's see what happens. But our short-term daily indicator from 102-100 is negative, and that's not a good sign, meaning the very, very short term is indicating a weaker U.S. dollar against the yen. Longer term, it favors the dollar. But right now, you're going to be looking at being out of this market if you're a short-term trader. Hey, this is Adam Hewison. I just want to wish all our members around the world a very happy and safe Memorial Day weekend. We'll be back on Tuesday. Don't forget to watch that video on the S&P 500. I think you'll enjoy it. I'll see you next week. Thanks for watching this video. I hope you found it helpful.